continental European time. Another technical press release detailing the change to the remuneration of minimum reserves will also be published at the same time. I will now outline in more detail how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. Economic activity in the euro area is likely to have slowed significantly in the third quarter of the year, and we expect a further weakening in the remainder of this year and the beginning of next year. By reducing people's real income and pushing up costs for firms, high inflation continues to dampen spending and production. Severe disruptions in the supply of gas have worsened the situation further, and both consumer and business confidence have fallen rapidly, which is also weighing on the economy. Demand for services is slowing after a strong performance in previous quarters, when those sectors most affected by the pandemic-related restrictions reopened, and survey-based indicators for new orders in the manufacturing sector are falling. Moreover, global economic activity is growing more slowly in the context of persistent geopolitical uncertainty, especially owing to Russia's unjustified war against Ukraine and tighter financing conditions. Worsening terms of trade, as the prices paid for imports rise faster than those received for exports, are weighing on incomes in the euro area. The labor market continued to perform well in the third quarter, and the unemployment rate remained at the historically low level of 6.6% in August. While short-term indicators suggest that jobs were still being created in the third quarter, the weakening of the economy could lead to a somewhat higher unemployment in the future. To limit the risk of fueling inflation, fiscal support measures to shield the economy from the impact of high energy prices should be temporary and targeted at the most vulnerable. Policymakers should provide incentives to lower energy consumption and bolster energy supply. At the same time, governments should pursue fiscal policies that show they are committed to gradually bringing down high public debt ratios. Structural policies should be designed to increase the euro area's growth potential and supply capacity and to boost its resilience, thereby contributing to a reduction in medium-term price pressures. The swift implementation of the investment and structural reform plans under the Next Generation EU programme will make an important contribution to these objectives. Inflation rose to 9.9% in September, reflecting further increases in all components. Energy price inflation at 40.7% remained the main driver of overall inflation, with an increasing contribution from gas and electricity prices. Food price inflation also rose further to 11.8%, as high input costs made food production more expensive. Supply bottlenecks are gradually easing, though their lagged impact is still contributing to inflation. The impact of pent-up demand, while weakening, is still driving up prices in the services sector. The depreciation of the euro has added to the buildup of inflationary pressures. Price pressures are evident in more and more sectors, in part owing to the impact of high energy costs feeding through to the whole economy. Measures of underlying inflation have thus remained at elevated levels. Among those measures, inflation excluding energy and food rose further to 4.8% in September. Strong labour markets are likely to support higher wages, as is some catch-up in wages to compensate for higher inflation. Incoming wage data and recent wage agreements indicate that the growth of wages may be picking up. Most measures of longer-term inflation expectations currently stand at around 2%, although further above-market revisions to some indicators warrant continued monitoring. Revisions to some indicators warrant continued monitoring. The incoming data confirm that risks to the economic growth outlook are clearly on the downside, especially in the near term. A long-lasting war in Ukraine remains a significant risk. Confidence could deteriorate further, and supply-side constraints could worsen again. Energy and food costs could also remain persistently higher than expected. A weakening world economy could be an additional drag on growth in the euro area. The risks to the inflation outlook are primarily on the upside. The major risk in the short term is a further rise in retail energy prices. Over the medium term, inflation may turn out to be higher than expected. If there are increases in the prices of energy and food commodities, and a stronger pass-through to consumer prices, a persistent worsening of the production capacity of the euro area economy, a persistent rise in inflation expectations above our target, or higher than anticipated wage rises. By contrast, a decline in energy costs and a further weakening of demand would lower price pressures. Bank funding costs are increasing in response to the rise in market interest rates. Borrowing has also become more expensive for firms and households. Bank lending to firms remains robust as they need to finance high production costs and build up inventories. At the same time, demand for loans to finance investment has continued to decline. Lending to households is moderating as credit standards have tightened and demand for loans has decreased in the context of rising interest rates and low consumer confidence. Our most recent bank lending survey reports that credit standards tightened for all loan categories in the third quarter of the year, as banks are becoming more concerned about the deteriorating outlook for the economy and the risks faced by their customer in the current environment. Banks expect to continue tightening their credit standards in the fourth quarter. So summing up, today we have raised the three key ECB interest rates by 75 basis points and expect to raise interest rates further to ensure the timely return of inflation to our medium-term target. With this third major policy rate increase in a row, we have made substantial progress in withdrawing monetary policy accommodation. The changes to the terms and conditions of our targeted longer-term refinancing operations will also contribute to the ongoing policy normalization process. Our future policy rate decisions will continue to be data dependent and follow a meeting-by-meeting approach. We stand ready to adjust.
I'm Brad Smith, alongside Julie Hyman and Brian Sozzi. Let's get right to the three things you need to know as the clock hits 9 a.m. It is a busy day on Wall Street, and we're seeing mixed action in futures as GDP comes in better than expected, but earnings from big tech, they continue to disappoint.
Yeah, that includes shares of Meta plummeting this morning, down over 20% after the company missed revenue estimates for the second quarter in a row and lowered its outlook for the fourth quarter.
And supply chain problems and higher costs weigh on Ford's earnings. CFO John Lawler will join us later in the show
for an interview you do not want to miss. But first, Julie, over to you on that Wi-Fi Interactive.
Yeah, I just want to give you a little earnings tour this morning because we have a lot of movers we're going to get to besides those top ones we were just talking about, as well as the movement that we are seeing on the back of GDP. Meta shares right now down 22%. We've got Shopify as an earnings mover too, trending on the Yahoo Finance sticker page. It's up 5.5% after earnings. Credit Suisse announcing a big restructuring. It's down 12% in extended trading here in the United States. We're going to be talking later to the ServiceNow CEO. Those shares up 15% on earnings. So there's obviously a lot to get through. But first, I want to take one more look at the futures here on the back of those GDP numbers that we got just a little while ago, and the movement that we saw in the futures on that GDP report, mostly upward here, coming out with a gain of 2.6% GDP growth, reversing 2 quarters of contraction in the U.S. economy. And perhaps even more encouragingly, the top line price index, 4.1%. That is smaller gain than estimated, smaller increase in inflation effectively than estimated last quarter. So that also feels like good news here this morning, Saz.
You're just on fire over there on that bar. The screens couldn't keep up with you. You're just blazing. All right, let's get back onto Meta. Meta getting another bite of reality in Q3 as the social media company continues to hemorrhage money on its metaverse investments. When asked about the aggressive spending Meta has put into Reality Labs, CEO Mark Zuckerberg urged investors to stay patient.
I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded.
Patience, catch a clue. This stock is getting beat down again. We have seen this over the past couple of earnings periods or cycles for Meta. The street, and I have a story on this right now on our homepage, yahoofinance.com. The street wants to hear one thing from Mark Zuckerberg: dial back these metaverse things. We are not going into the metaverse right now eating a Chipotle bowl. If you are hungry, you eat real food. Dial this stuff back. It is hurting the profit margins on Facebook at a time where it's seeing increased competition that's biting its sales. They don't get it. What are they doing? They appear to be investing even more in the metaverse, just completely tuning out what Wall Street wants to hear.
And a privacy change from Apple that they haven't figured out their way around. But you talk about that spending that they're going to continue to move forward with. At this point in time, they're projecting that total expenses for 2022 are going to come in around $85 to $87 billion. Billion with a B there. Going out into 2023, they're looking at total expenses coming in at $96 to $101 billion. This is continuing to invest heavily in the metaverse. They've also got some of the office refinements that they're going to be doing too. And so with all of that in mind, it still does come where you're seeing some of the shrinking advertising budgets in the near term over that period of time where this spending is also going to be taking place. And you got to wonder, for a company that is seeing pre-market its shares hit some of those early 2016 levels, if investors really want to stick around for the ride.
They don't. At least not a lot of them don't, right? I mean, that expense line is really the thing that analysts and investors are highlighting, the fact that they're spending so much money. And then they don't have much to show for it. Yes, Zuckerberg's asking for patience, but it would be easier to be patient if there were at least some early signs of encouraging things on that front. Horizon Worlds, which is the metaverse product, right, that he walks around in, they just got legs. It was very exciting, allegedly. Fewer than 200,000 monthly active users. The original goal was 500,000. So obviously falling well short of that. And also it was telling on the call, we don't often hear, and I know you know this, Saz, you've listened to a lot of these calls, we don't often hear analysts for a company this size getting a little bit testy, getting a little bit impatient on the call. Mark Mahaney, friend of the program, who we speak to frequently, saying the ad tools, he doesn't feel like they are focusing enough on these ad tools to cope with the Apple tracking changes and the other sort of macroeconomic changes. He says, listening to the call, I just don't hear it as a major investment priority. And it's unusual to hear that kind of frustration.
And Mark is not the only one that gets it here. I have to give a shout out to Benjamin Black over at Deutsche Bank, writing in his notes, the OPEX guidance for next year is the wrong number at the wrong time for investors. And what are investors doing? They're voting with their feet in the real world and getting out of the stock.
All right. Well, we're going to continue to watch Facebook as we get closer to our Facebook parent company, Meta.
I know that. Shares. Well, we still do that, and that is part of the issue, right? We do, Meta is not a thing. It's still not a thing as much as they want it to be a thing.
No. Exactly. It's like trying to make fetch happen. All right. Well, anyway, we're also keeping an eye on shares of Ford after the company reported a net loss for the third quarter. company cited supplier costs and parts shortages as headwinds during the quarter. Joining us now to dive further into these results. Big week for some of these earnings. Yahoo Finance's own Prasi Romanian continues to join us for the automakers' earnings. All right, so break down Ford for us here. What particularly stuck out to you?
You know, strong quarter from a revenue point of view. They did really well there. They warned about those costs that were rising, and they sort of hit that higher adjusted EBIT range for the quarter. But I think the big thing that the big headline was right before the earnings came out. TechCrunch had a report about how they are shutting down Argo AI. So we heard more about that. They are very kind of concerned that level 4 is not going to happen anytime soon, like beyond a 5-year horizon. So they basically just took that $2.7 billion loss, that non-cash loss. I'm going to absorb some of those engineers. I think VW, their partner, will do that too. So I was a little surprised about how that just came out of nowhere, really. We had no warning about that. So that was a little strange. But altogether, they had a good, strong quarter in terms of they sold, I think their sales are up 16% versus a year ago. So that's pretty well. High transaction prices here, $54,000 per car, which is nice for them. But how sustainable is that going forward? So some question marks there. Good quarter, but not as good as GM's, in my opinion.
In that Argo decision by Ford, really, it's a huge story. It is essentially Ford, one of the most, if not the most storied automaker, essentially saying, we don't believe that cars are going to drive by themselves in the next decade. Because if they did believe that, they would be investing aggressively. But now it has trickle-down, I would say, effects. You have that Cruise division over at General Motors. You have a company like Luminar that's working on LiDAR. I mean, what does this mean for the industry at large?
Well, it makes you question how bullish GM is on Cruise, right? Are they having the same problems that Argo is having? Are they kind of powering through those issues? I mean, they're saying it's like the greatest challenge of our time is full autonomy. And it sounds like that is a true challenge, like even harder getting someone on the moon, right? So I think that's what we're seeing, the reality of that right now. We're seeing that as investment money kind of contracts a bit, they're not willing to put more into Argo AI, and Argo couldn't raise any funds for continuing on in that venture.
I mean, it sounds like that they will absorb some of the workers from Argo AI. Reportedly, there are about 2,000 people who work there, and some of them are going to come work at Ford and maybe at Volkswagen too, which is its partner in the project. I was struck when I saw this news. We talked to Brian Selesky, who founded Argo AI and still was running it last May of 2021. And what was really striking to me at the time is that you get a lot of these self-driving people who really have grand plans. And even at that time, he was managing expectations in what felt like a more rational way. He said, you're not going to see, this is not a use case for everyone. In other words, you're not going to have everybody in self-driving cars. It's for very specific use cases. And maybe Ford wanted it to be for everything, for everyone, for every car. I don't know.
Well, even a couple months ago, Argo was talking about how they were expanding to certain areas like geo kind of fencing their service in certain cities and saying, hey, this is the way you kind of roll it out, take our time, go in areas we can control. But it seems like Ford's saying, you know what, we're going to pull back, put those resources towards level 2, level 3, and maybe go from there.
And Praj, real quick, this wasn't Jim Farley's initiative. This was put in place by former CEO Jim Hackett. So from his perspective, it's not his pet project. If for him, just take that money, to your point, and invest in other areas of the business that he has spearheaded.
Yeah, and Jim is really kind of spearheading a lot of the cost cutting now. Really wants to. I mean, we've heard he's going to trim a lot of the fat there. So that might be part of this situation why Argo is now longer kind of going to be on its own. So I think they're trying to spin it though. It's like we're going to focus on the Blue Cruise stuff that we're doing well with, sort of like GM's Super Cruise. So I think they're just going to keep it as like an assistive feature for autonomous, so not like full autonomy just quite yet.
And trimming costs because they're seeing higher supplier costs as well. And that's impacting what their operating profit even looks like from the third quarter into future quarters as well. And primarily the current quarter that we're in. Still any update that we're seeing on where that relationship with suppliers are, especially with relations to how they're able to actually get through some of the tens of thousands of vehicles that still are lacking parts right now?
Yeah, so they said that they're going to get those 40,000 vehicles, get the parts they need and send them out before the end of the year. So that's good news. As regards to cost, right? So they claim that they have that kind of under control, but are we going to get another warning for next quarter about, actually costs too much? So a good question for the Ford CFO coming up later today. Basically, are those costs contained? Do you actually see some costs coming down, like freight, right? Is that actually changing? I'm curious to hear about that. But you're right, Brad. I mean, are we going to see sort of like changes that are going to follow through going forward? Because it seems like GM, they're not talking about that.
Right. All right. Thanks so much, Pross. Lots to dig through here. And we're going to be speaking to the Ford CFO a little bit later in the show. So you'll be back with us as well. So we can talk about all of that. John Lawler, Ford CFO, joining us in the 10 a.m. hour. One other mover that we want to talk about here this morning, and that is Caterpillar. Well, there are a lot more movers we want to talk about, but right now we're going to talk about Caterpillar. Their shares are up by 6% following company's third quarter earnings that beat estimates on the top and bottom lines. Total sales and revenue for the company coming out, as you can see, pretty handily beating estimates, and revenue was up by 21% for Caterpillar here. Interesting here, they raised prices and saw higher sales volume, which we have not been hearing too much of, right? There's been a lot, particularly on the consumer side. Obviously, Caterpillar's more on the industrial side. On the consumer side, there's been a lot of, we raised prices, transactions kind of flat, sales volume kind of flat. Not so here. They saw both of those things rise. Machinery, energy, and transportation revenue up by 22% here. And they did see some currency impacts, as you would expect, for a company as international as Caterpillar. But overall, the number's pretty decent.
Yeah, about a $461 million impact currency related. But yeah, to your point, this was a good quarter for Caterpillar. You look across the construction industries, resource industries, energy, transportation, growth across every single one of them. And not just growth, it was double digit, nearly 20% for all of them, 30% for resource industries as well.
Hey, when you need a new dump truck, if you have to pay $50,000 more for it, you just pay for it. I mean, you got to haul this dirt around. But this stock usually tends to trade off of the results of that construction industry segment. That is their bread and butter. That's where you find a lot of these trucks that we're showing on screen here right now. And a very good quarter, to your point, guys. North America sales up 29%. Operating profits, because of those higher prices, those 40%. You always want to see operating profits rise faster than sales. That is a good thing. Only red flag, or one among a few, Europe. Europe was weak, and I think really plays into that notion that Europe is probably the most.
I mean, what's really surprising here from this is the three segments that you're looking at: the construction, resource, energy, and transportation. Of the first two, we've seen housing sales go down, right? And construction sort of pulling back to some extent. Resource prices, the underlying prices have certainly gone down, and yet this spending still seems to be holding up. Maybe some of these contracts were signed looking forward, who knows, to buy some of this equipment, but nonetheless, it's kind of surprising to see that kind of resiliency in these numbers.
Yeah, absolutely. Huge company. Big cat there on the day. We're going to continue to see where they move, both going into the trading session and after we begin things. We're just about 17 minutes away from the beginning of trade here on the day. Before we go to break, though, let's take a look at some of the other earnings movers in the pre-market here. You're taking a look at McDonald's, Comcast, Credit Suisse, ServiceNow, and Southwest. We've got
do all the numbers.
Well, yeah, you want that too? 15% higher on ServiceNow. We're going to speak to the CEO, Bill McDermott, later on. All right, that's the only one I'll do for right now. We've got a conversation with Credit Suisse later. Raymond James, ServiceNow overstock on the back of those earnings. We've got those conversations with those executives coming up later.
Good morning, guys. Good morning. It's my second live. I hope you guys are learning something. Peace, power, profit. Trying to ensure that as much as the financial market lingo is out there as possible, so that you can start understanding the terminology. And once you start understanding the terminology, and you get the basics down pat, the more you listen to different platforms, you're beginning to create your own methodology on how you want to go about doing things, and you'll be able to decipher information. So while I train myself, I'm just sharing info to make sure that I'm not the only person. So if there's someone else out there that's willing to learn, so when you see me pop on with the videos, just have your paper and pen and then do compare and contrast off of some of these videos. And the more you listen to it over and over and over, you begin to open up your trader view account and be able to plot points on the chart. So it's pretty much how that goes, Good morning. What up, Sonny?
Hey, peace.
What's up? What you got going on?
Nothing. I just put something in the chat. I was saying, what's stopping Meta from going to $50 or $60?
Today?
No, this period. By next year.
I don't know. You tell me. I've been paying attention other than the fact that they what they just said, Mike, CEO said, hey, I mean, he's like, I'm still gonna invest in it. Y'all be patient. Give it time. And he does. It seems like doesn't matter if the stock shares are dropping for whatever reason. I guess he has his goals and his visions, and he's still moving forward. So,
well, that's mostly why the stock shares are dropping, is because you have a whole lot of people that was heavily invested into this whole Meta idea, to the point to where they changed their name because they were operating like they were going to have the metaverse by 23, 24. And this is what they were saying at the beginning of this year and the end of last year. And so now they come with on their guidance that they're expecting the real metaverse by 2030, and that they're going to have like an upgraded Oculus and other things that they're going to do to keep you in that type of space. They also are trying to do gaming with the metaverse. They're trying to do ticket sales with the metaverse. Like they had, they partnered up with WWE. I mean, not WWE, with UFC to basically have fights where people could watch fights on their Oculus type piece, right? And it'll actually be like they're in the arena watching it live while people are really fighting. And so this is what the idea of it is, what they're trying to do, and have it to where you can have ticket sales, to each person to be able to get on there. That's the thing that they were talking about. But even with that idea, won't be until a while. They have to get people into the space of wanting to wear the Oculus first. And so that's going to take a minute, because right now with how the economy's going and different things like that, yeah, people are investing for a long period of time, but they're not trying to be where they invest and don't have no growth in between.
Say that again.
I'm kind of more into the fundamentals more than anything, because like when you know the fundamentals and you see the chart, you can tell why the chart is doing what they're doing.
Yep.
Because sometimes you'll be like say for instance, nobody did try to check out the news or the information on GDP or the CPI data or what's going on with the hype rates or anything like that, or oil, gas, none of that. And they're just looking at the chart. They just hoping on what's going to happen with their company. based on what they see, but it can go any direction at any time based on volatility.
Right. Cash
So
flow.
what was you looking at this morning?
Oh, nothing. I didn't even have plans to trade today. Got so much to do. Cause I was up. I didn't even go to bed until 4:30 this 5, 6, 5, I think. I was live this morning at 4 when the market opened.
Yeah, I was up early this morning looking for my bank card. I couldn't find it, so I had to switch the cash I had to spend today on the Cash App. I was like, dang, this is deep.
Yeah, I was up early and I had to. Was up with me in the chat, so I was I was communicating with them and sharing some videos and stuff this morning at like 4, and I did it for about 30 minutes. Then I finally was able to fall asleep, and then I was like, I'll come on right before the market opens. And I'll listen to what's going on. I started listening to the Europe press conference, and they increased their. They went to the 0.75.
Yeah.
I was like,
You said that they went to the 0.75.
mm-hmm. They just got off their press. They just came off their press conference.
Yeah, but that was expected though.
Mm-hmm.
So a lot of people already priced that in, and but depending on because a lot of people go on the fear. So depending on how they say it at the meeting, like if he's still talking about putting pressure on him, then it's going to be a lot of sell-off. But if he's talking about it's going the way that he wants it to go, and he's going to still put the 0.75, then it might be like a sideways trading to kind of going up. So those are the kind of things that make a difference too. That's why I say I like the fundamentals of it.
Right. You evolving?
Yeah, I'm definitely. I make sure I do it every day, all day. So you got it. I got no choice.
Yeah, I'm getting better.
If I didn't get better, something definitely wrong.
Getting better. So you got some pre-market screeners?
Nah, I actually haven't been checking it out. I just been reading different stocks as far as trying to check out what I'm gonna do for the pre-market. I was thinking if I was gonna jump on the bandwagon on the beat down with Meta, or I was gonna just keep the ones I have now, because I'm still I still got my my Google and my Microsoft. I've been holding on to them for a few days.
Mm-hmm. You have some options?
Yeah, I had puts on them.
Oh, okay.
So I'm just seeing how, since I'm up, I'm seeing how low it can go. But I'm probably gonna sell them today.
Let's see. We had some earnings today. Mm-hmm.
Yeah, I just wanted to see what it was gonna do in the open market.
Yeah, I got behind yesterday, so I didn't know anything because I had payroll, trying to bid some contracts. So I was just like, me just stressing, just chill out. Nothing going on. And then I was just playing and listen to some news stuff. And then you ready to go to my physical therapy. That's about it.
That's cool. So I gotta open up shop in about an hour anyway, so
You see, they're talking about on Black Box. It should be rocking and rolling.
Yeah, it's looking like Microsoft is finna cross on the 1 minute. And I want to see some sparks fly in the 4 minutes.
That little terminologist be that's be coming up with all kind of things. It's like see some sparks flying. Oh god. Oh man.
Yeah, put it on Microsoft.
He said it's on Microsoft.
Oh, it's on Microsoft. I'm
Yeah,
looking
it's
because
on
I'm
the
looking
daily.
at it. I'm looking at it on my Weibo.
You on the daily? I mean the one with church.
Yeah, I'm looking at it on the 1 minute. On the 1 minute, it's the 13 is coming close to the 48.
You will.
And it basically has pressure going down. So once that cross, you'll see a little something.
Let me see. Oh, and the RSI is low.
The RSI is even.
Yours is even.
Mm-hmm.
Oh, it just tested 230. Straight under the 200. Oh shit, it did trade. Let me go to Saturday. Oh shit, it got down. Oh, that must have been his earnings. Took a beat down.
Oh, a lot of people bought in. That was to fool you. So when you got look at that big drop, but when you have big money, I mean when you got little money, right, and you see on the pre-market how it'll start rising up and then it'll just be a heavy sell.
Mm-hmm.
Okay, that's like what I call like the fool use, right? So people will be jumping in the pre-market thinking that this stock is going to go up based on it's already going up. But what it is you got people that with big money that are buying up big quantities of it, like minutes at a time. It might be on a 3-minute ticker or like every 10 minutes or something like that, right? And as people start buying in, they just start selling heavy. Take all the cash.
Yep, take out them candles.
Yeah, and you start seeing that like on a big scale with these big companies like Microsoft or Meta or Google or something like that. When you see them giant candles back to back, that's them getting people on the big scale.
They kicking Meta butt so bad it ain't even, you can't even get the damn pre-market and the candles on the same damn screen. That's horrible. Look at it, man. It's way down here.
Let me see that. Yeah, it's like that on mine too. You gotta.
African Napoleon said he bought puts yesterday in the Meta. Shit, that's
because I tried to buy puts, but I was gonna be on, but I didn't want to just jump into it because I didn't read into the company, and I don't like doing that. Where I just jump in without knowing what's going on. Especially if it's overnight. Oh, market just opened and Meta just shot up from $98.
Let's see it.
What the hell? My contract was filled.
Oh
shit! I did have a Meta.
You got one? A put?
Wait, what the fuck?
What did you do?
Oh.
What did you do?
Man, that was a major accident.
Oh gosh. You went the other way. You went the other way.
Nah, I was demonstrating something for somebody. I mean, it's not a major accident, but I was demonstrating for something for somebody. So I had bought a Meta for $1. right, at a cost of 70. But I didn't mean to do it. And then I just looked at it right now.
Mm.
That's crazy.
Mm, mm, mm. Mm.
Yeah, I definitely didn't mean to do that because I like to read it before I jump into it.
The heck is going on? 1 minute chart. Man, this drop is like this drop is driving me.
What drop?
Oh,
Wait, which one are you looking at?
I'm on the meta on the 1 minute. Look at the RSI. It's so far down. Like, oh man.
Let's see. Oh yeah, it's dropping.
It's
definitely dropping. But see, it still has on the 1 minute. It still has enough pressure to keep going down. That's tough.
Let me hear what they're saying. Let's see what they're saying.
You got Google trying to apply pressure.
Okay, I wanted to see Caterpillar. That's what I wanted to go. So I should.
Well, it was, and it's kind of like up and down. That's a lot of investors in it right now.
Man, I hate the worst on the entire planet. It's that one right there.
He said,
No, I'm looking at the SPY. SPY look like it's trying to push, but it's not. So it's kind of crazy because you have a bunch of companies that's fighting it right now. Because some of them are ready to shoot, like Tesla shooting, and that's why you got SPY kind of going up. Tesla shooting, I think. Let me see. Look at Apple. Apple is horrible. Man, it shot up in the beginning and then it shot right back down.
Right.
Yeah, see, Tesla trying to make a move.
Yeah, that's crazy because when you got top companies like that fighting, it's gonna keep SPY at a neutral.
Yep.
I don't know. That might make me want to put some puts on something because something got to give. Oof, Microsoft is downing like crazy. Dang, Microsoft. Let me go look at my. $35.771.
They had a year before open, didn't they? Yeah, they had a good year.
Yeah. It keep breaking past that. Oh, it broke the 200.
Which one you looking
at? Oh, huh? I'm looking at Microsoft on the 1 minute. It's bouncing on the 200 right now with pressure and
took out that down institution buy they did in the pre-market.
Oh, it just broke, huh?
I said them candles came in, took out this green candle right here.
It tried to. That's why it dropped my it had dropped my earnings, well, my winnings to 37%.
Just that support.
But yeah, it's coming back with this this down play. It broke the 200s. It's headed down.
It break that 230 right there.
This is the meta.
Well, 230 will be the support.
My support.
But no, that's what the support is. It's 230. But once it breaks 230, the next support is I think 213 or something like that.
It broke it.
No, it's bouncing on it. It's at 230.23. Oh, yeah, it's still bouncing on it. Daytime low, new daytime low. Oh, broke. New daytime low, 230.
Yep.
Yes, see how it's bouncing on it using that support. What minute is it? On the 3, on the 5. If it can close a candle on the downside on the 5, it's gonna shoot. Oh, it just broke. It's going down. Let me check my Google. Oh, same thing on Google. Google is going down.
Everybody going down.
Oh yeah, I'm liking this. And Meta is fighting. That was the dollar accident anyway.
Better or worse than we expected? Better. I'm surprised that goes up. Doesn't that mean the Fed's got to do some more work?
Oof, the pain.
Technically,
Spy's on this way down.
That's true.
It's riding at 48.
I don't think you could paper trade on Cash App.
You say what?
I don't think you could paper trade on Cash App, huh?
Yeah, you can. You can't option. You can't do options.
Paper trade?
Paper trade, no.
Yeah.
I thought you meant regular trade. Yeah.
Somebody in the chat. I've been trying to push paper trade.
Nah. Oh, you can paper trade on Webull, just if they got that.
Yeah, I know that one.
I'm
gonna send it on.
See who's on the top gainers. User is up.
Yeah, you play that quite a bit.
See.
I just call them the Clorox, man.
Okay, boom. Google is cracking down hard. Just broke down to 93.
Eric, I think the market has this all.
Oh yeah.
Paper trade is like
it has if it breaks 93, its next support will be at 87.
Yeah, I've seen some people on Twitter saying they trust their ex-wife more than they do the market. The huge spreads I generally avoid, where I use limits, but I generally avoid them. Yeah, just do limit orders on coin.
Let's see.
On the watch list today. But you do have to use limit orders.
On Microsoft, they've been using the support at 228.
Let's see. Neil, could you post your white sheet up here somewhere?
No, it's pretty much the same as yesterday. You want me to repost yesterday? We're right at the same levels.
Yeah, if you don't mind. I went
Yeah. Find my phone. I had to re-download Instagram so I can see Maria's video.
There's only like 14 on.
Oh God, I'll have to go look.
Oh, it's been worth it. All 14 of them.
Let me see. I got some alerts.
Hmm.
I was looking at what about
Man, look at these doom candles.
what's going on with Boeing?
Google just hit new daytime lows. It's at 92.83. Microsoft pushing for daytime lows. What is that right there? Mo, Boeing?
It's Boeing.
Huh?
Boeing. That's Boeing.
You got something on that?
Somebody just did a call out for a call, 150 call, 5 cents. It only costs $5. See it? Let me see people. See it just is crossing.
Oh. Microsoft still reaching new daytime lows, 228.57 right now. Google tried to have a pop, but it's still getting beat down. What else we got? The SPY is maintaining on the 200. And it looks like it's trying to bull flag.
The SPY.
Yeah.
That gap up, it's gotta come back and fill it. Oh my God, look at Apple. Down, 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 down she go.
Oh yeah. Yeah. Let's see. Google pushing for more daytime lows. And then you got Microsoft. Microsoft is headed for a bull flag. I mean a bear flag.
You on them flags, huh? I have to learn that one. I almost had it with my little training yesterday.
Well, you looking at the neck ones, and then when it starts flattening out, it's like it's having a cool down stage.
You bet.
And usually, like when it is going down like that, past the RSI, it'll have its cool down stage where people start buying, and it'll because it's oversold. And then as it goes up a little bit, you'll see the pressure just start kicking in again.
Yep. All right, y'all. I gotta get out of here. I gotta go to.
Yeah, I gotta get ready myself. But
physical therapy.
You have a good day. Everybody out there, stay blessed, stay safe. You know, paper trade if needed. Try these different tactics we got, and hopefully everything works out for you.
Peace, power, and